Indeed. You just tell me when.
Okay, go ahead.
All right. So we're ready to get started. It was an adventure for the first 10 minutes or so. We got infamously Zoom hacked, and I haven't heard those words in a long time. So that was something else. So Dana was kind enough to figure out how to lock everyone out, and unfortunately, we just have a few. And we will be, she's recording it so that we can post it for anyone who wasn't able to get in because of the lovely gentleman who hacked a few minutes ago. So anyway, we're going to talk about special needs trust planning today. And my name is Victoria Martin. I'm an attorney locally here in Apple Valley. And we do mostly estate planning. So we help people plan their wills, their trusts, make sure that things are distributed the way that they want if they were to pass away, make sure that if they became incapacitated, they had a stroke or Alzheimer's or anything like that, someone would be able to handle their affairs for them, talk with their doctors if they were in the hospital. So kind of all those planning type of law. And we do also have a focus in special needs planning. And Dana and I met several years ago at the Apple Valley Chamber, and what she does is just super close to my heart. And I think it's absolutely wonderful and a wonderful thing to do for your family. I'm sure a lot of people worry about. So we're going to go over lots of different things today. We're going to talk about the purpose of special needs planning, the types of trusts that are commonly used to protect primarily the benefits of people who are special needs, who are receiving different government programs. What those special needs trusts are allowed to pay for, what is an ABLE account, which is we'll go over that in some detail today, and then administering those accounts as well. And then we'll have a question and answer period as well if you have any questions toward the end. So the primary purpose of special needs trust planning is to protect the needs-based benefits that the special needs child or adult is receiving. So some things are based on income, some benefits are based on income, and other benefits are not. So some benefits have no income requirements, asset requirements, anything like that. So for example, Social Security disability, that is not based on the asset level or the income level of the person receiving it. You can have, $1 million in the bank and still receive Social Security disability insurance. Same thing with Social Security. That's not based on any, financial assets that you have as the parent or that the special needs person has. Same thing with Medicare. Once you reach a certain age, you receive that, or under different circumstances, you can receive Medicare, that health insurance, and it's not based on income in any way. Examples of needs-based benefits would be Medi-Cal, so the health insurance that is for lower income, that they'll give it to you but you have to meet certain income and asset requirements. So for example, to qualify for Medi-Cal, you can only have around $2,000 in the bank. You're allowed to have a home, you're allowed to have a car, you're allowed to have an IRA, like a 401k type of a retirement plan. But you can't have a lot of money in the bank, or that you can't qualify for Medi-Cal. Same thing for in-home support services. To qualify for that, you have to be on Medi-Cal already, but you can use it to pay for house cleaning, meal prep, laundry, grocery shopping, bathing, etc. The person can live in the home, and it can be a family caregiver as well. So there's a process for becoming qualified with in-home support services to be when you're a family caregiver, so you can actually get paid to do what you need to be doing with your special needs child. Supplemental security income, that's an income benefit that you receive on a monthly basis. Again, you can only have around $2,000 in assets to qualify for that. And HUD subsidized housing is another one. So there are a couple of different types of special needs trust, and the purpose of the special needs trust is to allow your child to keep those benefits so that nothing is affected when they do receive certain funds. So a first party special needs trust is a type of trust that's usually established when you win a lawsuit on behalf of your child. So if there was some kind of an accident that caused your child to become disabled, if there was a mistake during the birthing process that caused all of this, and as you're going through the court system and suing the people who are responsible, the court will usually order that those funds be placed into a first party special needs trust so that the child can still keep their benefits, and it won't take their benefits away from them when they receive this lump sum of money for the lawsuit that has been going on. So it's most often funded with a settlement, but it can be funded with an inheritance. But it's called first party because the funds belong to the child and then they're contributing them to the trust. The other type that we'll go over next is a third party, and that's when you or someone else is leaving money to the child, as a third party is leaving money to them. For a first party special needs trust, it does have federal and state Medi-Cal payback provisions. So that is one of the downsides, is that Medi-Cal can come after that money or anything that's left in that trust if the child were to pass away. So that is a downside compared to the third party special needs trust, which the Medi-Cal cannot come after. Another requirement for the first party special needs trust is that they often require court approval and supervision. So when it's established in the first place, it'll be set for a hearing date for accountings that the court will supervise, usually at 1, 2, or 3 year intervals. So you have to keep really good records of what's being paid out of that special needs trust because it'll have to be reported to the court most of the time. And the funds are managed by a trustee, which is usually a family member. So when that first party special needs trust is set up, the court will kind of approve things. Someone will be appointed as the trustee to be able to be the signer for those funds and pay for things for the child. Now, the third party special needs trust, like I said, is funded with assets that belong to another person. So if I were to pass away and I want my special needs child to be able to receive part of my estate without losing their benefits, I can set up a third party special needs trust for them. So I can say that, I have 4 kids, I want 25% of my estate to go to my special needs child, but instead of it going to them directly, have it go to their special needs trust. And the benefit of doing that is if I give it to them, it goes into an account that's under their social security number, and then they can no longer qualify for those benefits. If I give it to their special needs trust, then the special needs trust will have its own tax ID number. So it's not linked to the child's social. So they don't legally or technically own the money themselves. The trust owns the money. And then the trustee, whoever, I may choose for it to be, is able to pay for things on behalf of my child without it affecting their benefits. So it can be funded immediately. If my mother, for example, wanted to give $100,000 to the special needs trust for a child, she's welcome to do that. It's still that third party special needs trust, but most often it's done through inheritance, that where parents set them up for their children or grandparents set them up for after they pass away to be given to the special needs child. And one of the great things about this is it's not subject to recovery by DHCS. So Medi-Cal will not come after that money. It's never considered the child's, so creditors can't come after it, things like that, and it still allows them to qualify for all their benefits. It also doesn't require any court approval. So you don't have to go to court to set it up. You don't have to do the accountings with the court. It keeps it out of court altogether, which is a huge benefit, cost-wise especially. And like I said, it's managed by a trustee, which is usually a family member, but you can choose whoever you'd like. It can be another one of your kids. It can be a friend. It can be a brother or sister, whoever you think would be responsible enough to manage those funds for the child for their whole life. And it also can direct what happens to the funds if the beneficiary were to pass away. So if, heaven forbid, the child passed away before they utilized all of the money in their special needs trust, you can say, okay, well, then I want it to go to my other children, or I want it to go to a charity, or I want it to go wherever. So you still have that control. It can be, one of the things to keep in mind is what the special needs trust can pay for. So there are a lot of rules on that, which is one of the reasons it allows to keep the benefits. So there are a lot of things that it can be used for that don't have any impact on the benefits that the child is receiving. You can use it for a vehicle, for fuel, for transportation, appliances, a phone, a computer, video games, medical expenses that aren't covered by Medi-Cal already, household products, lessons, instruments, pets, supplies, TV, vacations, concerts, sporting events, basically anything that would improve the quality of life for the person. So, and you can pay for the beneficiary and a companion for a lot of these things. So if you want to send them on a vacation or take them on a vacation, you can use these funds to pay for the beneficiary and someone to go with them so that they have a better time. The things that would impact their benefits are usually cash related. So if I were to give, my special needs child $100 in cash per month, technically that reduces their SSI dollar for dollar. Gift cards, the same, dollar for dollar. If I were to give them, $100 gift card, it's supposed to reduce it for dollar. If I use it to pay for housing, it can reduce it up to $281 a month. So that one's kind of a cost benefit analysis. Let's say you have a $100,000 special needs trust sitting there that you want to go to pay for the rent of your special needs child. If you pay for that rent, it will reduce their SSI up to $281 a month. But in the long run, it might be better for them to have free housing that's paid out of the special needs trust than to lose that $281 a month. So it's just kind of one of those things that would have to be weighed by the trustee at the time. Also utilities, the same thing that can impact the benefits and food, grocery costs. So pretty much anything that there are state programs to pay for you're not supposed to use those funds for. Now, from a practical standpoint, I haven't heard of anyone being questioned on what they used the funds for, but you are legally supposed to keep very good records in case you are audited, or in case Medi-Cal does ask what's going on, or any of the programs ask what's going on with the funds and what they've been paying for. So you do want to make sure you keep records of the items that you're using to pay, or of the items you're paying for out of the special needs trust. Now, a neat alternative to a special needs trust that is relatively new is called an ABLE account. And it's a special type of savings account for individuals with disabilities that is also exempt from Medi-Cal clawback or any kind of money judgment. It allows them to keep their benefits. So it's not technically counted as their money, just kind of like the special needs trust is. You put in money. It's usually in a type of investment, and it grows tax deferred. So it's kind of like a Roth IRA. If you've ever heard of one of those, you put the money in, it grows, and then when you pull it out, as long as you use it for qualified expenses, you don't have to, it's tax-free. The withdrawals are tax-free. So kind of like a 529 plan is that way as well if you use it for college, but this has to be used for qualified disability expenses. And one of the cool things about the ABLE accounts is they're a lot more lenient on those qualified disability expenses than they are out of the special needs trust. So I pulled a list here, but so for example, you can use it for certain living expenses, education, housing, transportation, employment training, health, financial management, legal fees. So there are a lot of different things that you can use the ABLE accounts for that would technically reduce the benefits or impact the benefits if you use them out of the special needs trust. Now, the caveat to that is the maximum annual contribution to an ABLE account is $15,000. So, when I pass away, if I want my house sold and put into an ABLE account, that's not possible. The maximum annual contribution is 15,000. So I couldn't say that my house, or I can't put $100,000 in it from my estate. The maximum limit is $100,000 to keep SSI and $529,000 to keep Medi-Cal, but that has to be put in at $15,000 a year and then add up to that amount. So kind of a cool thing that could be done is after the special needs trust has been created, you could start putting $15,000 a year into the ABLE account, and then maybe use it for some of those expenses that that they don't allow you to use when you are that's straight out of the special needs trust. It's kind of a little workaround to be able to use the funds for living expenses and things like that. So administering the special needs trust, after it's established, so you can create it ahead of time. So for example, if I have a special needs child, I can create their trust ahead of time before it's ever funded. It would be funded when I pass away. So you don't have to get the tax ID number for it when it's created. You have to get it when you're actually going to fund it, when you're going to start putting money into it. So at that time, you would get a tax ID number from the IRS. You can do it through an attorney, through a CPA, or if you know how to do it, you can get it on the IRS website. It's not super hard, but it's easy to do wrong if you haven't done one before, and it only takes like 10 minutes. So it's a good thing to get professional help with if you haven't done it before. You do have to notify Medi-Cal at the time of establishment. So not at the time it's funded, but you have to notify them as soon as you create it. But again, if it's that third-party special needs trust, then they review the trust. They say, okay, thank you. Everything's good. Thanks for notifying us. And they acknowledge that they can't come after it. If it's a first-party special needs trust, then Medi-Cal has to be notified at least 15 days prior to the hearing to establish the trust. So if you are, you're doing a lawsuit, you have an attorney who's helping you with that, and they know that this first party special needs trust is going to be created, they will most likely, as part of that lawsuit, send notice out to DHCS as part of the overall lawsuit, so that Medi-Cal will be aware that this is going on. You also have to notify them when the trust is terminated. So when all of the funds have been exhausted and paid out, and there's nothing left in there, then they have to be notified as well. And again, you do have to keep records of the use of the special needs trust funds. More careful records if you're accounting to the court all the time, very careful records, but just for safety purposes, it's good to keep diligent records either way. All right. So how about any questions? I know that's a lot of information.
So how do we go about setting these up?
Sure. So we set them up in our office. Most estate planning attorneys' offices do. So a big thing to think about would be, who you would want to manage the trust if something happened to you. That's probably the biggest and hardest decision to make. You'd essentially be appointing a guardian for your special needs child if anything were to happen to you, and someone to deal with any of their funds. So you want to think hard about who would be organized enough, responsible enough, and talk to that person about it. And if you can have a person, a standard person, and then a backup as well, that's an ideal situation. And then at that point, once that decision's made, you would come into the office, we would discuss all of your wishes, and we can, if you have multiple children and not all of them are special needs, part of the plan would be to establish the trust for the special needs child, but also to establish a revocable living trust for you and your husband, or you and your family, that would include the other kids as well.
So if we already have one of those, then that needs to kind of be broken down and rewritten then, right?
Possibly. If you already have one, then you may be able to just amend the current trust to include the special needs provisions or include the special needs trust that's created. It kind of
Okay.
depends on if anything else is being changed.
Okay.
And for financial planning purposes, if you already have a trust, you know, we hate to lose your business, but it may be less expensive to go back to the attorney who initially did the trust and see if they do special needs trust as well, than, you know, getting a new attorney. But we would love to have you.
And can you give us a roundabout figure for the cost of a special needs trust?
Sure. So generally, as part of the larger estate plan, so if you were doing your trust for you and your spouse, plus the special needs trust for the child, which is what most people do all at once, for a single person, it would be $2,500, and for a couple, it would be $2,750. And
that's for both?
That's for both.
Okay.
And that includes powers of attorney as well. So it includes your power of attorney for healthcare. So someone would be able to talk with the doctor if you or your spouse were in the hospital. It includes the guardianship form for your child. So to appoint a guardian for them as part of your, you know, part of your plan. It includes the financial power of attorney. So someone could get into your bank accounts and pay your bills if you were disabled or had Alzheimer's or something like that when you got older.
Okay.
And
Thank
then
you.
if you're doing just the special needs trust on its own, it's a little bit more. It's between 1,000 and 1,500.
Okay.
That's for the.
Are there any other questions?
I have a question.
And
A couple questions actually. For the special needs trust, the 1,000 to the 1,500, is that for both trusts, the two different ones that you shared about?
So we don't do first party special needs trust. Usually they're set up during the lawsuit or during the court procedure. But if you've already gone through that and then you're trying to figure things out from there, we do have a couple of people that we refer to. Unfortunately, most of them are down the hill that handle those kind of things. We do the third party special needs trusts. But you know, that being said, you can't just do the special needs trust if you don't also have your own revocable living trust. It has to be done in conjunction, because your and your spouse's trust feeds the special needs trust after you pass away. So it's kind of a, you know, building block.
That helped a lot, that explanation. Thank you. And then one last question. Where do you go for the ABLE account? Do you go to any bank?
There's certain banks that do it. ablenow.com is one of them. It's able-now.com. Usually just a good Google search. They're online banks. They help you set them up. From what I understand, they do the accounting for you. So they will do the reporting to the IRS for any withdrawals that are taken from that account. And I forgot to mention, with the ABLE account, if you use the funds for something that's not a qualified expense, you can still pull out that money. There's just a 10% penalty, and it goes on the child's income taxes. So it's as if they received those funds as income.
Is there a list somewhere that will tell you what are allowable withdrawals?
From the special needs trust or from the ABLE account?
For the ABLE account. You said it was very kind of lenient, but is there a list that will tell you
Sure.
what you can actually
Let me see
withdraw?
if I can put it in the chat here. I can show you the one that I'm looking at. That's pretty great. Okay. So if you were able to copy and paste that link, it doesn't look like it's active, but
Put your stuff in. You're not running this sensor too tight. What do you mean? Don't need to tight anymore. You're
Did-
uncomfortable.
It says this site can't be reached when I copied and pasted.
okay, let me see what I did wrong then.
Oh, wait, now it's coming up.
Okay.
Okay. Thank you. I know. Huh? I thought it was interesting with the ABLE accounts that we talked to several different banks and they'd never heard of them before. And I was just kind of a little bit leery about doing it online because I didn't know who I was actually dealing with. So just, I'm assuming you're safe if you just go to the able-now.com.
I would assume so. I mean, they have a wealth of information. They seem like a reputable bank.
Okay.
Like I said, they are relatively new. So the rules are kind of constantly changing with the ABLE accounts. But they just set these up, in the last decade for sure, as an option for people.
And do you know, do they normally let you establish a beneficiary?
That's a great question, but I believe so.
Okay. Because it's not just like, you know, if the child happens to pass away, where does the money go? I mean, it has to go somewhere.
Absolutely. Absolutely. They should let you establish a beneficiary on those accounts, and
Okay.
you as the custodian of the account may be able to pull out the funds even if the child passes away. So you'd also want to ask if they would let you name a backup custodian, a backup
Okay.
to handle those.
I have a question. Hi, can you hear me?
Yes.
Hi. Okay, I'm a guardian to a grandchild and she's disabled, but she's not on SSI currently. What would you recommend is besides getting a living trust for like my house and all that, or a family trust, what type of account would you suggest for me to put aside money for her?
Is she on Medi-Cal or any other benefits?
Yeah, just Medi-Cal. Mhm.
Okay, so then I would still recommend the third-party special needs trust because that will protect from Medi-Cal as well. It'll allow her to qualify for Medi-Cal, and it'll keep Medi-Cal from coming after the funds if she were to, if you were to pass away and she would inherit them.
Okay. And is that, and you do the third party or not?
Yes, we do the third party.
And that's included in the that you said about 2,500 for one person in for all those other benefit or those accounts?
Yes.
Okay. Anything else you'd recommend being a little bit different situation? There's, I have other grandkids, but I'm not raising them. So I was just more concerned for her care, in the future.
And that'd be something to think about too. It's kind of a tough thing to equalize. It's like, how do you equalize it when you know that this one child is going to need, need funds for their whole lifetime versus, your other kids who are able to get a job and able to create their own income and able to, save for retirement and all those different things. But it is something to think about ahead of time, and just how much of your estate do you want to dedicate toward your special needs child or grandchild, and then how much of your estate do you want to dedicate toward anyone else, if any.
Mhm. Yeah, because I know I have some life insurance set up to be equally divided between all the grandchildren. And I don't know, do they get taxed on that?
Generally, no. The only question would be, how old are the other grandkids?
Well, she's actually the youngest right now at 13. They're all, most of the other one, well, matter of fact, all of them are adults. Well, no, I'll take that back. There's 3 or 4 that are still underage. I have 10, so I think 4 are underage and the rest are all older. And then got a couple great grands, so, you know, want to put something out there for them too.
Oh, that's great. That's
But
great.
yeah, so I was just wondering, for the insurance, because I know my mom had money set aside, but I think hers was in a 401k, and I know there was taxing on that.
Yes, so
Um,
the 401k that you'd have to pay income taxes on when you pull out the funds, life insurance is not taxable. The only thing I would say is it would be a good idea to do the trust, because if you leave any life insurance money or anything like that, if you name a minor as a beneficiary, then their parent has to go to court to get access to it until they turn 18. So you may want to, and especially if, you know, maybe you don't have a close relationship with a parent or something like that, you definitely want to leave it through a trust instead. So someone else is set up to manage it until they reach that age. And then they don't have to go to court. It just avoids that whole court process.
Okay, so if there was, say, 2 children left that are underage and I didn't take care of that, would the money just stay with the insurance company till they turned? And would they be able to just go get it, or do they have to go to court through at that time to get it? Or,
Their parent would have to go to court to get it.
but if they didn't want to get it till after they turned 18, would it just sit with the insurance company then, or do you have to do something sooner?
I would be concerned it would be sent to the state controller's office if nothing was done within a certain amount of time. Usually you have about a year to handle things before they start saying like, hey, you got to do this, or we're going to send it to the state.
Okay, yeah, I got you. Thank you.
No problem.
So this is Dana from Our Disabilities, and I just have to say that I just finished setting up my estate plan for my home and my life insurance. I have 2 special needs adults, and so I set up my trust, put my home, put my bank accounts, put my life insurance in there, and I set up my 2 special needs trust, one for each child, and I left my house 50% to each of my disabled children. That way the caretaker would have somewhere to live and my children would not lose their home. So that's how I set up mine. And then my life insurance, when I passed away, would go into their trust and help take care of them for that. So that is just what I finished doing, which was a lot to think about, but it's a lot off my shoulders now. And I didn't want to leave my other adult kids not knowing what to do, where to go, how to handle things. So just you get a binder and it tells them what to do and it gives them information and guidance. And so just doing that gives you peace of mind. I've just seen too many places where we're leaving our kids with everything to handle, and I just didn't want to do that because it's already stressful for me. So Victoria was very professional and amazing, and they took great care of us. So I think you guys will be in good hands if you decide to go with them. And if anybody wants to call and talk to me or ask us questions, I can also answer that because I just went through the process.
Thank you, Dana.
You're welcome. Is there any more questions? Okay. So thank you guys for attending our informational estate planning and trust service class today. I apologize for what happened earlier. If you have any questions, you can reach out to Miss Victoria or to me, and we'll get you guys taken care of.
Okay, thank you so much for all the information.
Thank you.
Sure,
Yeah,
thank
thank you.
Thank you.